back with closing trades right here in ET now, just mapping what the markets are looking like. It softened a little bit from where we were earlier today, 58 points higher, 25,974. So that struggle with 26K for the futures clearly continues. While it's eternal all the way, Tata Steel has been holding up, Bajaj Auto, Maruti, Tech-M, these are all stocks which are looking good. But Shriram Finance, Bajaj Finance, Adani Enterprises, Asian Paints and Bharti, along with BEL, are the ones which are taking a little bit of a step back. The breadth of the market also has dwindled today. In fact, if nothing, it's only even Steven. Oro Pharma is your rank underperformer along with RVNL. But on the flip side, it's Amber, Swiggy and BSE, which are the ones which are holding out. But let me welcome on board Shivangi Sarda and find out what she's making of the market right now. Shivangi, hi, afternoon. When do we see a decisive move to 26K and stay put? Do you see that happen anytime soon?
Very good afternoon. Thank you for having me. So yesterday was the day when we were about to touch 26K levels, but of course there has been some sort of profit booking at those levels. But the good part is that we've kind of tried to maintain the opening levels, and even though we are sort of forming a doji formation, but the good part is that we are also forming higher top, higher bottom, which indicates that slow and steady move would continue over here in the index. Of course, this entire last 10 trading sessions has been a very volatile one, and we've seen swings, and some sort of consolidation would only stabilize the market. So this is looking quite good right now. We will look at 25,750 as an important make or break zone here, and that would also act as a support here, and for the upside move towards 26,200 mark. So buy and decline to continue over here. Strength is clearly visible here as compared to the banking index, because we've seen that the Bank Nifty has kind of consolidated within the previous day's band, and some of the banking stocks have now rubbed off their highs. So clearly the broader market would be something which we could vouch for, and sector specific action as compared to the banking index right now.
Okay, what we'll do is slip into another short break. We'll come back, we'll continue to talk stocks. Stay with us. Welcome back, and some top buzzers at this hour. In fact, there's Finolex Industries. The stock, the numbers came out just a few minutes ago, and we have seen a decent boom on the stock price as well. What we're seeing, in fact, is a 10% move on an Edelweiss financial. Lumax Industries also is buzzing in trade on the back of numbers. But let me bring on board Sudip Bandyopadhyay and get his take with regard to how he's viewing markets at this point. Sudip, good time to initiate a good long-term strategy. Do you believe that we're going to be in a rally in 2026? And if so, how do you play it?
Well, Harsh, rally has already started. As expected, once the India-US trade deal was announced, and later on the contours of the deal came out over the last weekend, I think market is taking it very positively. There are sectors which are definitely on an upswing. Overall, also, I think it's beneficial, and we should not look at it in isolation. Apart from this India-US, there is India-EU and India-UK trade deal as well. We are talking about a deal with Canada, West Asia, and there are multiple other trade deals which are in the pipeline. So I think these all augur well for multiple sectors, particularly sectors which are labor intensive, and this should help the Indian economy going forward. So as far as capital market is concerned, again, this is a positive development. Foreign investors have already started buying, and the clear signs are visible. They won't come at one shot or come in a big way. They will start biting into Indian market slowly. Maybe initially in the large cap, and then based on the risk profile, they will move into mid cap and small cap. But the large cap definitely will see buying from foreign investors, which should help the market and the indexes. So as far as we are concerned, we have been advising investors to pick up good quality stocks in the right sectors, and that advice remains where it was. I still believe there are significant opportunities in BFSI, chemicals, agrochemicals, specialty chemicals, and many other areas.
Okay, what we'll do is slip into another very short break. Stay with us, more on the other side.
And talk about that as well. But Shivangi, just looking at the market texture from within the broader end of the market, I can see a Swiggy, a BSE, Amber. A lot of these stocks are making a comeback, reacting to news flow or earnings. Anything that's looking good for a trade amongst this list?
So definitely BSE is looking quite positive. We've seen that this one has given a breakout on a larger time frame, and we've seen that it was consolidating within a very confined band on the monthly basis, but now coming out of the 3,000 odd level has been quite good for BSE. This one has been gaining momentum from the last three particular trading sessions with RSI showing positive divergence. So definitely BSC would be one preferred pick. And in fact, it would be one of my BTST ideas as well. And we're looking at the next targets of around about 3,300 on this one with a support of 3,120 levels.
Okay. Kunal, I'm curious to know what the view on Eternal is. That very strong move today. It's lifted the stock price by well over 10% from the lows, obviously. So it's doing very well for itself off the recent lows. What next?
Yeah, this is a very interesting move for Eternal because not just the price coming back to 300 plus levels, but the RSIs on the daily charts is almost at a 4-month high for Eternal. So this tells you that it's the comeback of momentum for the stock price, and from a point when the stock had fallen down, I think just about post results from 300, 302 levels to almost 250. That was a low for Eternal. Coming from those kind of a sharp corrective zone to making a comeback and offsetting the entire losses the stock had made post results, I think indicates that we are looking at a major retrieval of sort for Eternal. I would believe that now the stock should be good for a breakout back again on the higher side, and now higher targets open up for the stock price for the near term. 320 could be the first set of a target, which could probably be the midpoint of this 70-80 point correction the stock had shown almost like in the last 6 months or so. So 320 could be the first set of a target on the higher side for the stock over the very short term.
Sudip, how about you? Any earnings of late from within the mid and the small cap pool which have come to interest or come to the fore?
Look at the results which the specialty chemical and agrochemical companies are posting. I think there's a very clear sign of green shoot, turnaround, whatever you may call. This was a sector which was completely bombed out, and things have started really showing signs of improvement. You take Navin Fluorine, a fantastic set of numbers, pretty much on RT Industries, UPL. I think everywhere signs of positive development is visible. Also remember, China plus one remains very much valid, and India-US trade deal getting signed definitely will help this industry. They have between 25 to 50% of their production going to US and other Western European countries. So I think good days are going to be back for this sector. So one needs to carefully look and pick stocks in this space.
Interesting. Okay. Let me also take a quick check with regard to an M&M on charts, because we will see the numbers come through over the next day or so in terms of earnings. Shivangi, what's the view with regard to an M&M?
Yes, so looking at M&M, of course, we've seen that the entire pack has moved a lot, and we've seen that there has been momentum building off lately. But M&M has been one of the strongest counters in the entire pack, and we've seen that despite the intermediate weakness that we saw in the previous month, the stock has managed to recoup all of its losses, at least most of its losses, and we are still holding well above the 50 exponential moving average on the monthly basis. So those in those lines, technically speaking, on a longer time frame, the stock looks quite positive. In fact, this is one of the portfolio stocks that one should have as a diversification. And immediate basis, we are looking at 3,800 next. But positionally, the stock is ready for a 3900 odd zones.
The other one where the numbers were extremely strong, Sudip, was in Edelweiss Financial. Stock is up over 10%. How is this one looking from a fundamental perspective? I'm not sure if you have a view.
I think overall, Harsh, BFSI itself is doing good. I mean, look at each and every pocket of BFSI. I think it's been a very good quarter. Leave aside one or two misses, but by and large, this has been extremely good. As far as Edelweiss is concerned, you're absolutely right. We don't have any specific opinion or view on this particular stock, but I think the industry itself is doing well, and all the vectors are in place for growth. So I'm sure they are also doing well, but I haven't studied in detail. Just one small point, Aisha had asked me about which sectors I like, which stocks I like. Look at SBI. We don't have to go far. Fantastic set of numbers, much beyond anybody's expectation. Behemoth giving 13-14% growth and comfortably saying that similar or even better growth is expected in the coming quarters. Fantastic asset quality, which not seen in many years. I think it's all pointing to the signaling to the fact that BFSI is back and back in a big way.
Okay. Back now, pretty much all of those EMS stocks have come out with numbers. How do you look at it?
Well, I think Amber's numbers definitely was a positive surprise. And we do like this space. The only challenge, Harsh, has been the valuation. And that's why we are kind of very, very cautious as to where we are buying. But now I think things are looking that the growth momentum can be maintained by this sector in the foreseeable future. And probably if somebody is looking at a slightly long term, buying even an Amber at current level may be worthwhile. Look, apart from the growth vectors which were talked about just now by Ishika, I think the opening up of the Chinese opportunity, where we understand that the Chinese JVs and Chinese partnerships are going to be approved in the near future, and companies are gearing up for that, definitely augurs well for the EMS space overall for India, and some of these companies definitely. And they are gearing up to take opportunity of this opening up. And I'm sure this will put them in definitely a much better growth path. The challenge is if they're growing at 50-60% on a continuous basis, they can command a P multiple of 70-80. But if the growth comes down to 30-40, commanding a P multiple of 70-80 becomes difficult. So now the growth looks certain. So the P multiple should not be a problem going forward as well.
Okay. Let me read out to you Lumax's numbers, and let's also therefore shift focus to M&M. I did ask Shivangi for a view, but the numbers will be due tomorrow. Let's get a perspective from that auto pack. Revenue was up 19% on a YOY basis. EBITDA up 59.5% YOY. EBITDA margins have in fact come in at 11% versus the 8% number same time last year and the 9% number in the last quarter. This is the best margin number since December of 2022. In fact, even prior to that, because December 2022, the margin number was at 10%. This time it's come in at 10.5+%, so closer to the 11% number. When you're looking at profitability, it's surged. We've seen a 39% profit surge on a YOY basis, and therefore you're seeing that stock locked in upper circuit, 20% higher. Of course, it's a lighting manufacturer for the auto sector. Stock is up and away in trade. Okay, let me bring in Rabinder actually to give us a perspective on M&M's numbers in just a moment. But within the auto ang space, Kunal, I'm curious to know whether you have a preference.
Well, yeah, I think from the auto ang space, you're now looking at Sona BLW, you're looking at Motherson, Samvardhana Motherson. I think many of these stocks have shown signs of a very big breakout for themselves. And this comes out after, in many cases, months of sideways consolidation, as well as in names like Sona BLW, etc. These stocks had gone through a very sharp correction. So it looks like that we are looking at a very strong resurgence and a comeback of sorts from the auto ang space. From the large cap auto stocks, I think again the list is getting a little bit more stronger, because you now have the likes of Bajaj Auto, which is trading at a multi-week, multi-month high at 9,600, 700 kind of a zone. Maruti and M&M, they're still off from their recent highs which they had hit in the month of November, December 2025. But I would probably believe that these stocks can stand to make a strong comeback. Aisha Motors, the stock has been doing exceptionally well. That stock still looks quite strong. Look at the other names, Ashok Leyland, I think if I'm not wrong, the stock is clocked back again towards a fresh high for itself of around 207, 208, where it's trading right now. So there are a few pockets within the traditional auto pack which are looking quite strong. And with a resurgence of sorts coming back from the auto space, the entire sector looks quite vibrant.
Okay, that's that on auto angs, and definitely most of them are, coming off from their multi-month lows. But Shivangi, pure play autos, where is it that you are seeing signs of leadership, and does it continue with a Maruti or an M&M, or do you think Tata Motors passenger vehicles, especially since the start of the month when the motor on sales for the previous month came by, you think that's playing a very strong catch-up?
So Aisha, of course, I've been seeing the entire auto and auto ancillary pack, and of course, the tire stocks are looking quite positive. But you've asked me to stick to the auto name, so my focus would be on an M&M. Maruti has kind of bottomed out, but then that buying momentum is clearly not visible here yet. So I would a little wait and watch over here on this one. But Tata Motors has done quite well, and we've seen that this one has been trading in an upward sloping channel. So this one's looking quite positive. So one could look at selective pockets here. Of course, buying can be seen in a very skewed manner in the entire auto pack. So I would, advise one to diversify within the stronger names.
And within tires, what is it that you're identifying there?
So within tires, JK Tire is one stock which is looking quite positive. It has given a recent breakout on the larger time frame. After consolidating, it has managed to surpass its previous hurdle levels on the monthly basis, which makes it a good potential upside and a good risk reward at these levels as well. So JK Tire is one stock which one could look at.
Okay, let's also talk about M&M, because what is expected in terms of the numbers are a very strong set, 30% YOY in terms of revenue expected on a standalone basis. Mind you, we look at this standalone largely. We're also expecting EBITDA to be up by around 34% on a YOY basis and PAT to be up 37% YOY. Of course, total volume expected roughly at 20% sequential growth, up around 24% YOY. Auto division has shown again a 24% growth year over year. And we've seen margin, we are likely to see margin improvement led by operating leverage benefit and higher margin in tractor segment due to richer product mix. We're also expected to see auto EBIT margins at EBIT margins of around 9.4 odd percent. That's really the anticipation. Versus the 9.7% number in Q3 of FY25, and the tractor EBIT margins are expected to get much better though. So that's where the tailwind with regard to EBIT will largely come from. From 18.5%, it's expected to go up to around 20.5%. There's also going to be some one-offs in terms of the RBL bank stake sale, which will likely reflect on the numbers. So that's the other piece that you want to keep in mind. Sudip, where would M&M stack up in terms of a preference within that auto pack?
Well, it has been on the top of my list for quite some time, for the last almost 2 years, and it continues to remain there. I believe strongly that all the segments of their automobile business have been doing phenomenally well and will continue to do well. The SUV segment, of course, they have been always doing well and they continue to do well. The tractor has picked up, and I understand with the way the rural economy is shaping up, I think the demand should continue to remain strong. The EV segment, where they have taken tentative steps, I think it looks very, very promising. So overall, we've been positive on M&M, and I will continue to maintain our view. If I have to pick a second stock, I will probably go and pick up Maruti still at current level, because the traction which they've got in the lower end of the market continues to remain strong, and we believe that this momentum is going to continue even in the fourth quarter.
Okay, let's just revisit some of those, jewelry retailers from yesterday. Titan, of course, ahead of its numbers. Let's check in on that stock. Yesterday, what saw a huge spurt, of course, was Kalyan Jewellers, and the entire pack has been a buzz. Shivangi, any trading opportunity even after the recent spurt that we've seen in these stocks?
Out of the entire pack, I think Titan has been the most resilient one and the most reliable one, if I have to say. We've seen that Titan, of course, from its days high, it's kind of seen some bit of rub off in today's session. But overall, on the longer time frame, it has been respecting the upward sloping channel on the weekly basis. So this one's quite strong. And Titan has been a name which has stood out for the quality of the business and the parent as well. So Titan is one stock which we can look out for. The next positional targets that we're looking at for Titan is around about 4,500 odd levels.
Okay. All right. So that's with regard to Titan. I wonder, Sudip, what's your take? Within this jewelry pack, would Titan be the one which stands out, or would you look at some of the smaller names within the jewelry space?
And Titan is always a good buy for a long-term perspective. But one has to remember that you're buying a stock at a 90 multiple. So you have to give it some time. I mean, that's the general assumption. And you have to stick to that. If you get a gain before that, I mean, that's well and good. But if buying a stock at 90 PE multiple, you should be prepared for the long haul. The other stock amongst the smaller players, which I like, is Semco. I think that's available at a multiple which is relatively better. It's around 30-35 multiple it's quoting at, whereas Kalyan quotes at around 70, close to 70. And some of the even smaller players and regional or a city-specific players like a Thangamile quotes at a 90 multiple again. So I would say, avoid these city and zone-specific players. Look at pan-India players or players who are expanding pan-India at this stage and have reasonable multiple. Accordingly, Semco has been our favorite for some time.
Okay. All right. So that's on some of the jewelry counters. I wonder how sectors are
Muted close that you're seeing, because that struggle with 26K clearly continues. Kunal, what's the reading now in the charts? Should 26,000 be taken conclusively?
Yeah, I think, generally what happens is when the index nears a major resistance point, a psychological number or a round figure number, in this case 26,000 mark, there are two ways in which the index attempts to go into a breakout of sorts. The first one is where the number of option traders, they start to accumulate a lot more, which means that there are fresh buyers which you see on the options or as well as on the index futures. Or the other way, which I believe is a much more powerful way, is unwinding of short positions. And we've seen the latter happening for the index so far in the last 4 days also. We saw a good amount of index unwinding which has started to shape up, specifically on the Nifty futures. And then add to the fact that the market breadth starts to open up. Generally what happens is, if the index nears a major resistance point, if the market breadth is a lot more stronger, then the index not just heads into a breakout, but the breakout sustains and builds. So that's what was the missing part for the index in the last 6 months or so. We have had a breakout of the 26,000 mark, but we were unable to sustain because the market breadth was a lot more lagging. So I think this time around that could be the only positive change which the index is showcasing. So I would probably believe that we are looking at a potential breakout of the 26,000 mark, maybe another couple of days of consolidation before we head into that zone. But whenever that happens, I think it should be a very strong and a powerful breakout, unlike in the recent times what we've seen.
Okay. All right. Shivangi, Sudip, we let you go on that note. Thank you so much for joining us this afternoon and giving us those views. Let me quickly